Today over the impending debt limit fight. Citi's out with a stock screener of names highly exposed to government spending and contracts. The list has a lot of healthcare and defense names. We're going to trade three of them today. Joining us to do that, let's start with Northrop Grumman. The stock down 19% this year, but Citi says the defense sector tends to recover the most when a spending resolution is reached. As I mentioned, here with our trades is David Wagner. He's Aptus Capital Advisors portfolio manager. David, it's good to see you. Let's start with Northrop. What would you do with the stock here?
Yeah, great seeing you too, Kelly. I think one of the greatest things about NOC is, well, outside of what Kathy Warden has been doing over there, is their portfolio. If you actually dive into where they have a lot of their concentrations, such as classified space, nuclear deterrence, hypersonic defense, they are fully aligned with the long-term priorities of the defense budget really moving forward. Because, if you look at some peers, I don't want to call anyone out, but cough, Lockheed Martin, they have a dependence on the F-35. And this is a prime example of an area of spending that's probably lower on the list of importance. So if you want to heed to, a quote from Animal Farm, all animals are created equal, yet, some are created more equal. You actually may find out that in this space, some aerospace companies are definitely positioned a lot more favorably than others. And that would definitely be NOC. So that's why I think, it wouldn't surprise me if you look 3-4 years down the road from now that we're probably still going to be talking about the top line growth at NOC. And I'm just not sure that could be said about a lot of their peers.
All right, so let's move on to General Electric, which is up 55, and I again say 55% this year, as Citi puts it in its top basket of stocks with the most direct exposure to government spending. And David, you think the valuation up here is getting a little hard. And by the way, this company is breaking up fully over the next couple of years.
Oh, it 100% is. It's the best name in the industrial space right now. And, Dom, I do think in my commentary here, I'm probably going to come out sounding a little bit bullish. I love the transformative, cleaner story. I also love the actions taken by CEO Larry Culp. I mean, how can you dislike a strategy where the CEO comes out saying their favorite metric is free cash flow and that earnings is just a byproduct? But given the recent run that you just mentioned there, I'm definitely on the sidelines due to valuation. It trades at a 35% premium to the S&P 500, where it's historically traded, say, like a 10% premium. So I do think that a lot of this transformative story is definitely being priced in right now. It's like since January, it was the official start date that, GE got out of that, deal purgatory, because that healthcare spin out was definitely executed quite well. And they're in the home stretch for Vernova, but can't get past valuation.
Just a word on Boeing real quick. David, shares up on that huge Ryanair order.
Yeah, I think if you did a flashback to say, 3-4 years ago, I don't think I'd ever say that I was bullish on Boeing. But, the dynamic has definitely changed. So I may not be fully bullish right now. I'm definitely getting a little bit more optimistic here.
All right. David Wagner, a pleasure, sir. Thanks for your time today. And for more on the stock Citi thinks are most exposed to the debt ceiling fight, for better or worse, head to cnbc.com/pro.